G'day folks, welcome back to Pete's Investing. It's the 25th of May 2024. So we got gold, silver and Bitcoin all dropping since our last update, and the US dollar has shifted sideways. In terms of a heat map, you can see there in the middle, still bullish on the monthly trend using the CCO 150 on all of the instruments for gold, silver, US dollar and Bitcoin, and predominantly neutral at the moment on the weekly, and got a mixed bag there with gold and silver showing bearish movement with the US dollar and Bitcoin in a neutral positioning. Now in terms of a three-step process to buy or sell, we look at the trend. So if you want to trade on the daily time frame, we look at the larger time frame for the trend. So we look at the weekly, or if you're trading on the intraday, like the 1 hour, the 15 minute, or even the 2 hour, etc., you look at the daily trend as a minimum. Next step is we trade in the direction of the you've chosen in step one, but we trade when there's a fresh breakout on the CCO 150 from the moving averages. And the last step is you close the trade when the CCO 150 enters in the moving average band of moving averages. So on the trends, first off on the monthly, we've got a bullish movement. This is for gold. On the weekly, it's broken down into the moving average band, so giving us a neutral signal. And on the daily, it's already bearish. It's broken below the moving average band. Now, if I zoom out on this one, you can see here there is a bearish divergence on the weekly. So if I just draw that, higher highs on the price versus lower highs on the CCO 150 on the weekly. There's no divergence on the monthly. And looking at the daily, and these are all independent in terms of divergence, we've got a lower high on the CCO 150 on the daily versus higher highs there. And more recently, we've got lower highs again there versus the price chart. Now you'll notice that first one, the first divergence, it hit our minimum target range, and that minimum target would have been, if I draw a Fibonacci range, between that low and that high, or even actually would have taken it back to, that would have been back to that low. So you can see that's between the 23 and the 38% level. That was our initial target, and it actually just touched the 23% before bouncing. And more recently, we've got this bearish divergence, and that would go back, if I was to draw another Fibonacci, between that low there to take it to the highest point. You can see there it's already broken and resting on the 38% level at the moment. So the key area to look out for, if it drops further and it drops below the 61%, then we're going to have a pretty much a reversal on the daily at least for the gold price, and then we look at further support resistance areas below that level once we get to that. So we take it step by step. At the moment it's sitting on the 38% level. The next level will be the 50% and then the 61%, and we'll see where it goes after that. We'll just delete that Fibonacci for now. Now if we go to the hourly time frame, and also the daily as a reference. So again, we're looking at a bearish signal on the daily, and that'll be showing you that with a bearish signal. It's broken below the moving average band. So we only take short trades. So if we mark our short indicator, and that would have happened from that point there, from the 22nd of May. So the 22nd of May, around about there, you would have taken some short positions in that area there, and at that point you would have generated 77 points of profit if you're going short only. So we don't take long trades. So even though it's broken above now, we don't take long or short trades, because we wait for the next break below the moving averages of the CCO 150 before taking further short positionings. And if I put in the long positions for those periods back here when it broke above on the 15th of May, so you can see there you would have taken long positions from there. Don't take any short positions when it breaks down. You would have been careful about going long here because you've got bearish divergence. But again, another bullish trade there. And that would have generated, from that point, would have generated about 27.9 points. And again, don't take any long or short trades because it's broken to the downside until at that point there when we said we take short trades only once it starts, when they're both breaking down in accordance with the bearish movement on the daily chart. For silver, on the monthly, we've got a bullish movement. Now we did have a double top on the CCI. We're going to delete that. That's now being invalidated. We've got new highs on the CCI. So that's no longer valid. So that divergence has failed. So it's making new highs. It's bullish movement on the monthly. It's bullish on the weekly. Again, no divergence to see there. And on the daily, we've got a bearish divergence, and it's also broken down into a bearish movement. So it's just a fresh breakout on the downside on the CCI moving averages. Now looks like it's that bearish divergence is starting to play out. It hit the resistance up there at 32.52 and starting to break down. So at the moment, further downside. So if we jump to the hourly and daily chart as a reference, again only short trades at the moment. Let's put in the short simulation of trades. So again, bearish from around the 23rd of May. So from this point onwards, that would have been your first trade to take, and that would have generated 119 points. You wait for the next signal to break to the downside, and that's where you start generating the next short positioning. And that would have just probably broken out, and you would have broken around even on that one. So again, wait for the breakout to the downside once on the price chart to take another short position trade. That's assuming the daily continues in a short momentum. For the US dollar on the monthly, it's bullish, although notice the CCI is starting to retrace slightly. On the weekly, it's neutral, it's within the moving average band, and there is no divergence currently. But if I zoom out on the monthly first off, you'll notice there was a long-term bearish divergence that was happening for a number of years versus higher highs on the price, and that's actually fallen off. Now, that's still got a bit of a way to go. Let me just see if it's hit the 23%, if I take it back to that recent low. Yeah, you can see there it's broken down and resting, currently bouncing off that 38% level. So it might have actually completed its divergence, although we never know because sometimes they can actually fall a lot lower. But at the moment, it looks like it's respected that 38% level and bounced off there off the monthly. On the weekly, we do have a neutral positioning. You can see there it's sitting within that moving average band of the CCI 150, and there was no divergence to talk of. On the daily, it's currently neutral. It's within the moving average band. And if I zoom out, we did draw this Fibonacci retracement, and that was because of this little bearish divergence versus a double top on the price, and that's actually respected that, and it's actually broken down, bounced off the 50% level or just below it, and making further upside now. And you can see there the CCI is broken into that moving average band. So it's actually bounced, that divergence has worked, it's bounced off from there. Now we could actually go lower, just be careful. We never know where it's going to stop. Now if we jump to the hourly chart, again using the daily as a reference, it's neutral, so avoid long or short positions, but you can see there, had you gone short during that period there on the 13th of May, go back to the 13th of May, you would have taken short positions from there down, and that would have generated 77 points. Avoid this long positioning on the hourly. Again, this is assuming you're trading on the hourly, but you apply the same principles on the other time frames, the intraday time frames. So don't go short during this period. You would have made potentially, they would have been small little losses going long there, short there. Again, going short during that period only. And again, you wait for the CCI to break below and also the price to break below. So these would have been false breaks. You can see there the prices are making new highs. So you probably want to avoid, when you see this longer term trend, the little false breaks. So again, avoid those little false breaks if you see the price trending up, especially if you see the bullish candles on the daily. Lastly, for Bitcoin on the monthly, it's bullish. It's broken above the moving average. I can't tell if there's any divergence because we haven't got the history on the monthly on the CCI 150. On the weekly, we did have a bearish divergence here back in that period versus higher highs on the price, and this one actually fell below the 61% level. So, and it actually started and it bounced from there. So that was actually a pretty big retrace. And since then, the CCI is moving in line with the price, so there's no divergence. We've got lower highs on the CCI and lower highs on the price, so no divergence. And on the daily, we did have that would have been maybe almost considered a double top along that resistance at 71,950 versus lower lows on the CCI 150, lower highs on the CCI 150. And since then, it's actually making a new high, so it's a neutral signal at the moment. Jumping to the hourly chart. So again, using the daily as a reference, it's neutral. Avoid long or short positions. And you can see there, that's because of this on the hourly. We've got a bearish divergence, lower highs versus higher highs on the price. Hit that resistance, as we said. It's actually broken to the downside. So if we drew a Fibonacci between that recent low to that high, you can see there it's broken and bounced off that 38% level, almost the 50% level, and now making further highs. Now notice also the CCI is falling off and about to enter into the moving average band. So at the moment, because of the dailies in a neutral positioning, it's within the band there. You avoid long or short positions on that one. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.